Have you ever stopped to consider what truly underpins the value of the money in your pocket? It's not just paper or digital entries. It's a profound, collective belief. Today, we delve into the historical and analytical role of gold and silver in shaping this fundamental confidence in our monetary systems. Money, in its essence, is a social construct. It functions effectively not because of its intrinsic material, but because people trust it. This trust is multifaceted, encompassing belief in its future acceptance, its stability as a store of value, and the integrity of the system that issues it. Without this shared belief, any currency, regardless of its backing, would quickly lose its utility. Understanding the historical interplay between precious metals and this trust offers crucial insights into modern financial literacy and economic stability. For a currency to serve its purpose, it must reliably fulfill three key functions: a medium of exchange, a unit of account, and a store of value. Each function critically depends on public confidence. A currency's ability to retain reasonable purchasing power over time is paramount. This belief isn't accidental. It's meticulously built through robust institutions, clear rules, historical precedent, and consistent economic performance. Gold and silver have historically played a significant, albeit evolving, role in cultivating this essential trust. For millennia, gold and silver served as the bedrock of monetary systems. Their inherent scarcity, durability, and divisibility made them ideal commodities for exchange. They provided a tangible, universally recognized reference point that inherently limited the supply of money. This convertibility into precious metals, particularly under the gold standard, imposed a natural discipline on governments. It prevented excessive currency issuance, thereby reinforcing public confidence in the currency's long-term value and stability. The transition from commodity-backed currencies to modern fiat systems marks a pivotal moment in monetary history. While gold and silver once directly circulated or guaranteed convertibility, today's currencies derive their value from government decree and public trust. The Bretton Woods system, which pegged the US dollar to gold, represented a significant post-war attempt to maintain this link. However, the ultimate severing of the dollar's convertibility to gold in 1971 ushered in an era where central bank credibility and sound fiscal policy became the primary anchors of confidence. This shift demands a deeper understanding of how trust is now generated. In a fiat system, confidence is no longer tied to a physical commodity. Instead, it rests on the full faith and credit of the issuing government and its central bank. Factors like low inflation, stable economic growth, transparent governance, and effective monetary policy are now paramount. This doesn't mean precious metals are irrelevant. Rather, their role has transformed from a direct mechanism of convertibility to an indirect, psychological, and symbolic influence. They continue to offer a historical perspective on value. Gold and silver possess a unique psychological and symbolic weight. They represent permanence, scarcity, and continuity across vast stretches of human history. These deeply ingrained perceptions are not easily dismissed, even in modern financial markets. Symbols play a crucial role in anchoring expectations and reducing uncertainty, especially during periods of economic flux. The enduring allure of precious metals taps into a collective memory of stability, providing a psychological comfort that transcends mere economic utility. During times of profound economic uncertainty or geopolitical instability, confidence in traditional financial instruments can waver. It is precisely in these moments that gold and silver often reemerge as prominent topics of discussion and investment. They are perceived as safe haven assets. This flight to quality isn't necessarily because they fix systemic issues, but because they offer a tangible, historically proven alternative. Their perceived intrinsic value and independence from any single government's policy provide a sense of security when other assets falter. Silver holds a distinct historical and economic profile compared to gold. While also a monetary metal, its lower value and greater abundance made it the metal of choice for everyday coinage and transactions for centuries. This widespread use fostered trust at the grassroots level. Today, silver's dual role as both a monetary asset and a critical industrial metal in electronics, solar panels, etc. gives it unique market dynamics. Its price can be influenced by both financial sentiment and industrial demand, making it a fascinating subject for economic analysis. Ultimately, the success or failure of any monetary system hinges on confidence. Technical mechanisms are important, but they are secondary to the collective belief in the currency's enduring value and the system's integrity. When confidence erodes, even the most sophisticated systems can collapse. Gold and silver, through their historical roles, provided visible limits and continuity, helping to build and maintain this trust. Understanding this historical context is vital for investors, economists, and the general public to navigate the complexities of modern finance. It's crucial to maintain a balanced view. Gold and silver do not, by themselves, create confidence. Robust institutions, prudent fiscal policies, and effective central bank governance are the primary drivers of trust in modern economies. However, history unequivocally demonstrates that precious metals have served as powerful complements. They have reinforced confidence when systems needed an anchor, offering a tangible link to a long history of value. Their role is supportive and symbolic, not a replacement for sound economic management. This nuanced understanding is key to financial literacy. Gold and silver have profoundly shaped our understanding of currency confidence by providing continuity, powerful symbolism, and tangible reference points throughout history. They don't supersede modern monetary systems, but rather illuminate the deep-seated human need for trust in our economic exchanges. Their story is a testament to how belief, more than material, truly underpins value. In our next discussion, we will analytically explore why precious metals, despite their historical significance, are not a panacea for all monetary challenges, and why this distinction is essential for informed decision-making. Asterisk. Disclaimer. This content is for educational and informational purposes only and should not be construed as financial, investment, or economic advice. Always consult with a qualified professional before making any financial decisions. If this exploration into the historical and economic underpinnings of currency confidence resonated with you, please like this video and subscribe to our channel for more in-depth analyses. Your engagement fuels our mission to provide valuable financial literacy and economic insights. Share your thoughts in the comments below. We love hearing from our community of investors, students, and economists. Thank you for watching, and we wish you a day filled with informed decisions.